Hello and welcome everyone to our conversation today about the potash market. My name is Fleur Groves and I'm a consultant at EMR Capital looking at the commodity markets. Today I'm going to give a brief update on the market as it's been very good in 2021 and look at where it could go from here, and then catch up with Highfield Resources and Peak Minerals for an update. But first I've asked Owen Hegarty, Executive Chairman of EMR Capital, to join me to explain why EMR has invested in potash. So, Owen, EMR Capital identified potash as a commodity of interest almost 10 years ago now. So can you explain what attracted EMR to potash, and then specifically to Highfield Resources and Peak Minerals?
Yes, thanks, Fleur, and thanks for the opportunity to have a bit of a go here today. Yes, quite rightly, the thematics that we identified about 10 years or so ago, those thematics, the key success factors and so on, are still very much the same today. And they are, you've got an expanding, growing population around the world. You've got fussier diets that people are having, higher protein diets and so on. People are living longer and effectively eating more. And under those circumstances, you need, that combined with less arable land going around does mean that you need more fertilizer. And potash, the K in the NPK, is such an important essential ingredient, actually. So that's MOP itself, and of course SOP as well, which is a higher quality, if you like, without the chloride in it. That's a very important fertilizer with an even faster growth rate type of thing. So those thematics still very much the same. And we invested into Highfield Resources, ASX listed, HFR, and we invested into Peak Minerals, and the Peak is SOP and HFR is MOP. HFR is in Spain, Peak is in the United States, and they're both really good projects, and because they have got the right next door to infrastructure, right in the middle of the market, and if you're going to be in bulk minerals, bulk commodities, you really do need to have that infrastructure solution, and ideally you like to be in the middle of the market. And that's exactly what Highfield has. You build the mine, the operation, and you plug it into the surrounding infrastructure and the surrounding market. It's as simple as that. And the SOP project in Utah, in America, same. In other words, you're able to take advantage of a really good jurisdiction, really mining friendly, development friendly, surrounded by infrastructure and surrounded by the market. So you've got all of those things in those two projects. So that's why we did it back about 10 years or so ago. Two really good projects with excellent people, and those thematics, Fleur, are still the same today. Back to you. Thank you. Okay,
great. Thank you very much. I'm also very happy to have with me Ignacio Salazar from Highfield Resources, which is an ASX listed company in which EMR Capital has a substantial holding. And Ignacio is going to give us an update on his project in Spain. I'm also pleased to welcome Dean Pekeski from Peak Minerals. Peak Minerals is wholly owned by EMR Capital, and Dean will be giving an update on his project in Utah. Now I also wanted to have a look at potash prices. So these prices are at decade highs due to particularly strong demand this year due to high crop prices and uncertain supply outlook. Overall, despite other companies bringing on new supply this year, it actually hasn't been enough to balance the market, and that high demand means that inventories are still really low. So we'll just stop sharing that for now, just to talk about where prices could go from here. So in the short term, demand's probably going to support high prices at least into next year, but then farmer affordability is probably going to start eroding into those prices eventually. And then in the medium term, producers will probably look to address market tightness, and the market should come back closer to balance. And then in the long term, new supply will be required to match constant growing demand. So on the topic of supply additions, I guess I've got to make mention of the big news from this year, which was BHP approving its stage 1 of its Jansen project. And that's a big project, more than 4 million tonnes production at a cost of at least 5.7 billion. So I guess one of the questions I get a lot is there actually space for another 4 million tonnes in the market? And I guess BHP says yes, surprise, surprise. By the time Jansen ramps up, which is actually going to be quite a fair way away, at least another 8 years to get there, additional supply will be required to meet growing demand and offset all the mine closures. And yeah, so I guess the next question is there room for any more projects in the market? And our answer is yes as well. So I think what you need to look for in projects is that they're cost competitive, particularly the ones that are very close to market, because that makes a big difference on the cost curve, and have competitive carbon intensity. Projects with those key criteria should all do pretty well. So it's probably a good place to bring in my guests today. I was going to start with you, Ignacio. Can you tell me a bit about your project in particular and how it's going to fit into the supply mix?
Well, in the supply, well, I'm talking about timing. So we see ourselves as the next mine in Europe, potash mine. So we are very advanced in the development phase, and we are preparing for construction, in fact, and getting through the final stage. What we discuss about in general, the potash market today, I think it's good to be quick on the line to get there. Now, there is, for our project, I'm talking about the supply and competition globally. There are three, I mean, that is what is in the slide. We have three, what I call inbuilt competitive advantages, that this project has compared to peers and compared to Canadian or Russian producers, And those are the three ones you see there. The first one, and probably the most important, is the location. So the project you see there in the middle of the circle is where we are based in Pamplona, in the north of Spain. North of Spain, south of France, with crops and wine and cereals, is a very intensive agricultural region, all of that, and is in deficit of potash. 50% of our production will be to supply a market that is at the doorstep of the mine. 25% will go to Europe and 25% to Brazil, where we will get some benefits from the seasonality between northern and southern hemisphere. Even in Brazil as well, when you compare to peers, we are a significant advantage compared to somebody. I mean, we have at the port of Bilbao, very close to the mine, to the north of the mine, you see one of those dots, and we access Brazil very quickly compared to somebody sending the product from the middle of Canada, going to the Pacific and Panama Channel, etc. So that is for a high volume commodity product like potash. As you can imagine, the transportation cost and the access to the markets and the flexibility we provide to customers is a massive advantage. The second one you see there, as well, compared to other projects, we have shallow mineralization, So, and we have no aquifers above our mineralization. That means that we will be accessing mineralization with two declines. You see a line in white there, nicely coming to the mineralization. I mean, typically the other projects have to build a shaft, freeze the aquifer to build the shaft to access mineralization. And mineralization typically is 1,000 meters deep of depth or more. So as you can imagine, a lot easier for us to build, to maintain, to operate compared to typical potash project. And the last one, being in the north of Spain, and with all the development in Europe and European funds, everything else for many years in Spain by now, we have world-class infrastructure again around the mine. This is the motorway going from Pamplona, which is the city known for because of the bull runs, to very close to the mine. That is the port of Bilbao, is the biggest deep water port in Spain, 200 kilometers from the mine. So typically the other projects have to build all infrastructure for the sake of the project. We have it there. I mean, when you put all of that together, you don't need a shaft, you are very with access, all the infrastructure is there. We have very low capex, very low operating cost. I mean, Europe is trading at a premium in terms of prices. So we have 75% of our production in Europe, higher prices than other projects. I mean, at the end of the day, we have top quartile margins, lower capex, so very strong economics, 2 billion euros NPV, more than 300 million EBITDA per year once we are at full production. So a very, very strong project from the economic and financial perspective.
Yeah, definitely ticks the boxes.
Very competitive,
close to market
very competitive.
And low cost. Very good.
Yeah, absolutely, yeah.
And Ignacio, you've had a really busy year. Just when everyone else is dealing with a pandemic, you've got a lot done since I think July. So can you just run through everything that's happened in the last 6 months?
Well, a lot of during the pandemic. Well, I think it's been relatively, I am not going to say easy to work, but we kept pushing. Basically, I mean, it's probably a lot of detail there, but the main point is the mining concession. So there was for several years, well, that all the effort and the focus was on getting the mining concession. And I think it's to some extent what was dragging the company to a big extent, because as I said, the economics and the geology and the engineering is I dare to say no doubt on the competitive advantage of this project. No, but that is behind us. Finally, we got the mining concession on the 1st of July, 2021. So that is a massive tick on the box, as you can see there, a very big one. And we've been also dealing with, I mean, in parallel, all the detail engineering is ready for construction. We appointed Endeavor to work on the financing. We've been doing a lot of due diligence work for the banks. As I said, markets are our strongest point. So MOUs for sales, MOUs, and with the ports is not only Bilbao I referred to, is another port next to Bilbao, Pasajes, where also we already have an agreement with them to move on. And also we did a small equity raise after the mining concession was granted in July. So we did it in August, just to make sure that we had all the, well, a healthy cash position going forward in any case. A few days ago, we announced to the market an update on reserves, simply reconfirming, as I said, the economics are so strong that we are more than happy to reconfirm everything is fine and we keep going. And the reserves, I mean, audited by SRK, are as the market are expected to be. And hopefully in the next few days, you see that box, we will be doing an update of the feasibility just to reconfirm those numbers I was talking about were announced at the end of 2019. We will be reconfirmed. There shouldn't be any material difference to everything I said. So that is done. And we are now working what we call the preparation of construction, just with our partner, Acciona is a very strong Spanish construction company with a lot of business in Australia, some long lead items that we're procuring, practically getting 100% of the plant equipment contracted soon. Local, there is still a bit of paperwork with construction licenses and working through the financing process with Endeavor. Talking to some strategic investors, some potential deals there, but let's see how it goes. So our intention is to get at the end of Q1 in springtime here in Spain, start construction. Potentially starting a bit early with some electricity works. That's why that arrow is a bit earlier, but then just be in construction. Construction 2.5 years, in production in 2024. Yeah,
it's a relatively short time to production once you've got everything in place next quarter.
Well, it's a lot to put in place, but we are working all in parallel. You know how these things, you need to get, all everything aligned, but that is what we are working with and hopefully ticking the boxes as we move along.
Very, very good. Looks like you've got another very busy 6 months.
Yep.
So yeah, we look forward to catching up with you again and seeing all those boxes ticked in 6 months' time. I'll bring you in, Dean. So thinking back to the start where we were talking about potash and what's happening in the market at the moment, just wondering if you had any other comments on where you see the outlook for potash and SOP in particular.
In terms of the market outlook that you described, I agree with your commentary there. I think the outlook for potash is strong, and it's particularly strong for potassium sulfate or SOP. The SOP market is smaller than the MOP market, but the demand for the commodity is really being driven and supported by fundamental shifts in consumers' lifestyles, the desire for healthier lifestyles, the desire to tap into what we call the whole foods philosophy, where people want to eat better. They want to know where their food comes from. They want fresh fruits and vegetables on their table, and they're willing to pay premium prices for those fresh fruits and vegetables, knowing that they're coming from perhaps certified organic farms. And all those things feed into the demand profile for SOP. We see, especially in North America, in the United States, where our project is located in Utah, demand for these high value crops is growing. You can see it. You can see a shift in how farmers are planting these crops. And we're really speaking about fruits, vegetables, nuts, things like blueberries, avocados, grapes, tea, coffee. All these crops require SOP as their primary nutrient source, because they're relatively, they can't tolerate chloride, which is what's in MOP. In our particular project's case, the demand in North America is centered on the California and Pacific Northwest and Mexican markets, and being located in southern Utah, we're very well placed to supply SOP to these locations by truck or by rail, having excellent connectivity. So I think potash is a good place to be. It's a long-term commodity that the world's going to need, and we're looking forward to supplying that need.
Mm-hmm. You covered off on a couple of these points, but yeah, I'm not sure if you wanted to just go into a bit more detail about where you are and how the process works and how it's a bit different as well.
For sure. So our project is in Utah. We are a different type of potash project in that the potassium and the sulfate that's contained in the resource is all brine hosted. So it's in liquid form, contained within the upper 100 feet or so of what we call the severe playa. It's a terminal lake bed, so it's received incoming brine over a long period of time, and that brine has become concentrated in this particular location. We've spent a lot of time. There's a lot of work has gone into understanding the project over the last 12 years. We've navigated our way through all the exploration and project development hurdles that projects like this need to navigate. And at the present time, we're really entering into the final phase of a development philosophy that'll see us develop a multi-phase approach to the project, and start the front end engineering, which is actually commenced. We're looking forward to the next 10 to 12 months to complete all those activities so that we're ready to build. We're targeting this premium product. Our product will be organic certified, so we will be able to meet the market. We have listened to the market, and the market is wanting certified organic potassium sulfate, or SOP. We're going to fill that gap or that niche. You talked about premium price, and I think SOP. There is a linkage between SOP and MOP. And we realize that and exploit that in our production philosophy and in our marketing strategy that we've developed. Well, one of the unique things about our project is that we're permitted. We have all the permits in hand to commence construction as soon as possible, having navigated that through a federal permitting process in the United States. So that box has been ticked. I spoke about location. We're located, very strategically in Utah, mining jurisdiction with a long history of mining. We're close proximity to all the infrastructure one would like to see for a world-class fertilizer project to be developed. So we're proximal to rail, water, roads, power, and unlike perhaps some of the Australian projects that folks may be familiar with in terms of SOP and brine hosted projects, we're in the world's largest market, right? The Americas are a significant demand area in terms of SOP. That demand is growing in markets like I mentioned, and at the present time is structurally undersupplied. So production from our project will fill that supply gap and also displace higher cost SOP that's currently being imported to support the specific American demand. So we're excited about that. For a project to be world-class, obviously we have to have exceptional project economics, which we do. We're relatively low cost in terms of capital cost, operating cost. We have strong returns on both phases of our project. And I think, more topical and important to today's consumer and today's investor is that we've got a low carbon footprint. Our carbon emissions are lower than any other SOP development project on the planet, and certainly lower than all the Mannheim produced SOP that currently constitutes most of the supply globally. So we're pretty excited about that, and we'd like to talk about that. We've spent some time looking at our process, and we know that through some of the process design work that we spent a lot of time on, we know that we're innovative. So we've done things perhaps a little bit differently, with a mindset to utilize a process that lowers cost, but also improves recovery, reduces energy requirements, smaller carbon emission footprint compared to SOP that's currently being produced. So not only can we displace that higher cost SOP, we can also ensure that folks understand that they're saving money, but they're also improving our impact on the planet. And I think that's really important for not only consumers but investors to understand as well. We have a pathway to production. We understand it. We've got our project permitted, like I mentioned, and we benefit from just having a team that's really familiar with the project. And so we're really looking forward to completing this FEED or front-end engineering work in 2022 to position ourselves to start construction as soon as possible and become a producer of SOP in one of the most dynamic potash markets in the world. So we're pretty excited about that.
Yeah, that sounds great. So you've ticked all those boxes as well in terms of being cost competitive and particularly close to your market in a competitive ESG position as well. So yeah, that's good. Thank you very much, Ignacio and Dean, for joining me today and running through your projects and helping me give an update on the potash market. And you're both particularly busy at the moment, so look forward to potentially catching up with you again in maybe another 6 months' time, and seeing how you're going with ticking all those boxes.
Thanks to you, Fleur.
Okay, bye.
Thank you very much. Bye-bye.
So Owen, welcome back. We've reviewed the potash market and had a comprehensive update from Ignacio at Highfield and Dean at Peak Minerals. So in closing today, can you share your perspective on these projects and the year ahead next year?
Oh yeah, thanks, Fleur. And look, really good to listen to Ignacio and Dean. I mean, they're doing a terrific job for us and for their projects and all stakeholders, basically. I mean, Ignacio's built up a very, very strong team. He's set to go now with the final financing. There's a lot of interest, as you've explained. The market is on fire, if you like. So terrific interest over there. So good to go at HFR, and 2022 will be a very exciting and defining year for HFR. Getting into construction and getting really quickly into production in a market that's very positive. So look, we're 100% supportive there, and ditto actually on the other side of the Atlantic, if you like, with Dean and Peak Minerals project, a bit smaller, if you like, and the SOP market as opposed to the broader MOP market, but the growth rate of that SOP is terrific. And Dean again has done a great job for us and all of the stakeholders there, and he's built up a very powerful team and built up all of the relevant relationships there in Utah with the government, local communities, and so on. And he is all set to go too. So, you know, we're putting a lot of work into all that. So look, great projects, great people, and 2022 is going to be a crackerjack year for resources and equally for potash and our project. So I'm looking forward to it, Fleur, with great enthusiasm. Back to you, Fleur.
Okay, great. Thank you very much, Owen. Looking forward to catching up next year and seeing how the projects are going. Thank you.